Let me ask you, you talk to a lot of clients across the country of all sorts. What do they tell you about Washington and how Washington may be affecting their business for good or not so much for good?
Look, at the end of the day, banks reflect the economy. So it's our customers on the commercial side doing something, our customers on the consumer side doing something, our institutional customers doing. So our job is to transmit the economy back and forth for our clients, and we are a product of the success of them. When you talk to those clients today, they're saying, hey, they want to win. They're big clients that want to win on a global stage, little clients that want to win on a local stage, and they want to win. And what they feel is as the burdens of the regulation and rules impinge upon that, they give feedback. And the feedback I get from them is they feel the balances need to be rebalanced. That's what they tell us. Meanwhile, they're still growing their business, they're still investing. So you got to be a little careful what they say they want versus what they're doing. But the reality is they're saying, hey, we got to swing the pendulum back a little bit, because in the end of the day, they are what America thrives on. We have 180 million people work in this country. The dominant part work for private enterprises. Our success, the ability to fund every governmental program, the defense, everything comes from the taxes paid by corporations and individuals who work for companies, honestly. So that's where the money comes from. So if we're going to have a successful country, and based on where we are in America, in the world right now, we can dominate if we let the capital system run right, run with the right guardrails, run.
How much of, Brian, is the impingement of regulation as opposed to talk about it? Because I'll pick on one right now. Antitrust, something I know about. I used to practice antitrust law. There's a lot of talk about antitrust enforcement from the current administration, when if you actually look what happened, they didn't get a lot of that through the courts. How much of it is just the perception we're talking about regulation as opposed to actual regulation?
Well, in that case, if you think about what happened with deals over the last couple of years, any deal of size that was announced was purported to be challenged, and a lot of them were. And so therefore, if you're sitting in a boardroom saying, I'm going to expose my company as seller to a transaction, a public company, and I'm going to stabilize it for the period of time it takes to get it done, and I feel that it's going to have to go through multiple reviews and then ultimately a challenge in court, you know what, we'll wait. And that just slowed down deals, because of all the businesses we have in the company, the thing that's still, there's great pipeline, but not coming through the system is still the M&A deal flow. We have a strong pipeline, it's ready to go, but the feeling has to be, and in our industry, we can't make an acquisition by law, we can't, but the ability to get bank deals done is something that you hear talked about a lot. Our colleagues want to merge and get better so they can compete with us and the biggest banks and competitors compete on a worldwide stage, and they're struggling because they can't get the deals done. It takes so long. So that's the decision. It's not necessarily the deal won't get done, it's if it takes a year and a half to get it through. That is just very destabilizing for the sell side of a company. And on the buy side, they just want to grow their business and be heroic and take the competition. And not everybody has the staying power to wait 2 years to say, I'm going to put on hold everything I do in a unit because I'm going to buy a unit to make it grow faster and make it more successful and win and make my company the best in the world. And if it takes me 2 years to do that, that means I got to slow down the organic effort, because I think it'll be wasted money if this comes in. If that took 6 months, then that changes the calculus. So it's more about deal flow and capabilities, as opposed to what you might see actually get stopped or not go, or the inquiries. It's just the chill.
When it comes to regulation, the Supreme Court had quite a term this last term. There are 4 different decisions that basically said we're not going to defer to the regulatory agencies nearly as much, so we're supposedly taking on the so-called administrative state. At the same time, that probably means a lot more litigation. It's good for lawyers. If you're a lawyer, and I have nothing against lawyers making money, that's okay. At the same time, do you think that's ultimately good for business if the courts get more involved in it and take some away from the regulatory agencies?
You and I are both reformed lawyers,
right.
and so, in the end of the day, we are for good, clear, fair regulation. That's what that's what I'm for, and that's what our industry's for. Give us a set of rules, let us go after it. If you keep changing the rules back and forth based on political movements, based on swings, based on personalities, based on studies we may think are relevant or not relevant as an industry, that just goes on. So something like Basel III has been going on for years, and you're saying, please just get it done so we can get on with life and figure out how to adjust the business model. But don't be overburdening in it. So I think that's what you're feeling with some of this. And I think the court system is saying, wait a second, whether it was the Chevron doctrine, all these, whether it was a statement that, look, we need regulatory agents to be able to go and do what they're doing. Wait, maybe it's swung too far, that there's too much activism in the regulatory side as opposed to the court side. And if you go back and read the great civil rights cases, there was extreme activism to right the wrongs of the past in the court side. I think the court's saying, hey, let's have Congress really write the laws that they want with precision, let the regulatory agencies interpret them, and we're here to make sure that that goes right. And that's what I think you saw in those 4 cases.
Brian, Bank of America, of course, is a true global company. One of the things that strikes me as interesting is I think the U.S. economy right now is the envy of the world.
It is.
I think whatever you think about American exceptionalism, when it comes to the economy, it's an exceptional economy.
Yeah.
And yet, within the economy, we're constantly criticizing and having doubts, and it's not working right and things like that. What do we need to do as an economy, and this can be Washington or it can be private business, to make sure we continue to have that growth, that innovation, that disruption, constructive disruption?
So if you look at the stats, 80% of the flows have come into this country, chasing the opportunities of the repatriation of the chips industry, of the clean energy industry, of infrastructure, all coming here. Certainty of work rules, certainty of tax rate, and certainty of sort of investment and return, all going. They're going to the states, honestly, that are the fastest at permitting. So if you ask me to say, what are the fastest things? If you want to build more housing, you got to permit it faster. If you want to get the green projects done, you got to permit them faster. That's in control of the locals. That's hard for the federal government, but that is a government obligation. The second thing is provide incentives where you want it. If you want more housing, you got to keep providing tax benefits. They were talking about taking them away in the capital calculations that we were talking about. Well, we're going to slow down doing it. We do $5 billion of low and moderate income housing a year. So we are a major because we get a tax benefit. Our tax rate is 9%. People say, oh my God, your tax rate's low. It would be 25% if we didn't get the benefits from low-income housing investment and environment. So the governments have to give clear rules about permitting and implementation. They need to not keep changing the rules about how you get, how taxes work and things like that, because people are making 10 and 15-year investments. And then they've got to think about, do we have the worker capacity to actually fulfill the dreams? And that's the trickier thing, because without population growth organically, and by the way, we're no different in Europe and other countries or China, you have a problem that if you have more demand for workers, you better have workers, you just create inflation. And AI and everything's going to come, but not now. It's not here now. And by the way, even if you said we can grow the population, it takes 18 years to make an 18-year-old. So you're not going to change population dynamics near term, and our population without immigration doesn't grow in this country. And that's something you can't change. You're not going to change in any historical context. It's been like that for years. So we got to have a rational immigration. So we need workers and talent workers and general workers. We need a fair tax code that people can understand, and that's what they did. And then you need the investment strategy and incentives for certain businesses. But on top of all that, you also need that local permitting so that things can get done with pace. And in a lot of the environmental stuff, it's been fascinating to watch how long it takes. But by the way, we're not alone. In European countries, it takes 7 or 8 years to deploy a wind farm. So does in the U.S. You're just saying, guys, if we want this, you can't take 7 years to plan it out.
But as a recovering lawyer, is it possible the federal system will save us on that competition among the states, the laboratories of the states? Because, in fact, if the investment's going to the states that do permitting faster, then sooner or later the other states are going to have to catch up.
They are. And you show that, because I'm in the CEO groups in various states, I show the maps of where all the money on these investments are going, and you say, you've got to change your local stuff to match the incentives. Look, America has the best structure for this. It could be we know we can improve it, and it's clear. And if we do, we're already the end of the world in the economy. The biggest economy in the world, actually growing with real numbers and real debate about what the right policies are. We got to handle the fiscal situation carefully to get it back in line. There's a lot of other things that are plus and minus, but the talented workforce, the ease of investment, the standard set of rules, the capital markets, these are things other people do. And by the way, we're the United States. So one of the things that we worry about is the disaggregation of state level laws and regulations in our banks. If you go to Europe, you still operate in multiple jurisdictions. Everybody has a different rule. That is what the United States is about, saying, hey, we'll agree to one set of rules where it's important to the federal level, and we'll let the states will have rights at a different level. But we got to make sure that we don't get that balance swung back, or then we become a confederation of states. You don't get the throughput. The massive ability to attach the whole market of 330 million people through deployment and free movement of commerce and is really important.